2 months ago, at an unofficial meeting at a hotel in Algeria, OPEC took the market by surprise by saying that it agreed to agree on a deal to cut production between 32.5 and 33 million barrels of oil per day. Now, this was in a bid to cut oversupply and lift oil prices. Through now to today, Thursday the 30th of November, a deal's been reached with OPEC with its first cut in production since 2008, taking 1.2 million barrels of oil a day off the markets. But where does it go from here? Joshua Mahony joins us now. We've certainly looked at a gain in the price of oil as a result of this. We've seen a big lift. In fact, Brent, I know, has gone above $50 a barrel for the first time in a while. But underlying this, the cut itself, maybe in the context, is not that such a big deal.
Yeah, not particularly. I think the big news is the fact that they've had a cut at all, because no one was really expecting it, quite honestly. There are so many different actors within these meetings that there's always going to be someone that's essentially going to be able to throw the toys out the pram and essentially rebuff any efforts to really raise the price of oil. Well, we have seen a deal reached, albeit seemingly they also need to get the non-OPEC members to agree to around about a 600,000 barrels per day cut as well. So that is a caveat to bear in mind. It's also worth bearing in mind that this cut is tantamount to a cut back to where they were in April levels, so it's not necessarily all too big. But the markets have certainly taken it in its stride, and you can see here on the daily time frame that we have seen a substantial rally, mainly because of the fact that this is a surprise to many. But crucially, we've come back into this trendline resistance. We can see here that essentially we've got that low back in September, the previous peak back on the 22nd of November, and now we've got that as a potential area of resistance today as well. So look, from a wider perspective, this continues the trend of higher highs, higher lows that's been instigated since the low back in the 14th of November. It points towards the potential for further gains, but bear in mind also that the last 6 to 8 months has all been capped around about this $53 to $54 mark. So there is a potential for further upside, but we do have that big area of resistance to bear in mind. Also, with that trendline resistance, you can see we have seen quite a substantial amount of choppiness despite the fact that this agreement has been reached. Have we seen this market sort of exhausted in terms of its upside, and are we going to see some sort of retracement lower? If we are, then we'll be looking towards a break of this previous peak here, 50.75. You can see that peak there. A break below there on an hourly close, which we haven't seen, would point towards some sort of pullback, and maybe 49.72 could actually be the support to look out for. But to the upside, there certainly is the potential for another move higher, and we'll be looking for that trend line to be broken to give us more confidence that we're going to see another push towards the 53, 54 mark.
OK, well, if we see a retracement, we've got to work out exactly what this means for the other markets. We've seen record highs for the Dow, for the S&P 500 today, driven by the big oil companies, the Exxons, and the companies that go to support those companies like Halliburton and Baker Hughes and so forth. And of course, if we do get a retrenchment, we're likely to see some of these markets pull away, which means we could well see a pullback from record highs for the S&P. In terms of the Dow, which I know is what you're going to look at next, What next for the index?
Well, it's been a remarkably consistent trend recently, and that's why I wanted to bring it up. I mean, this is the weekly, just to give you a wider perspective. You can see we've punched some new all-time highs, and we've done it in a very convincing manner. Previously, whenever we've done it, we've not necessarily actually followed through with it, and we have on this occasion. So there is the potential for a continuation of that. This is it on a 4-hour chart. Now we can see that essentially, we've come back to those previous all-time highs, tried to push through it, not necessarily held. So here 190, 197 is going to be really important today. If we get a close up above there on, say, an hour or a 4-hour candle, then that could really pave the way for another period of strength for this market. Now you're going to see the likes of the European markets performing well if we see continued upside for oil, and you'd expect the same kind of thing for the Dow, bearing in mind that the winners out of this whole deal from OPEC, yes, you get a few members of OPEC, most notably the likes of Iran, who actually will continue to keep high levels of output. But the US ultimately are the winners from this, because they can do what they want, and they're also going to get the benefits of a higher oil price. So that should benefit US stocks.
What about the losers? What about gold? Because this is a trade that's on the opposite side, really, to what's happening in the equity markets at the moment. You were talking this morning in charting the markets. I know you can see this on IG Player about your charting gold. And I mean, gold's now on the way down.
It is, yeah, it's worked out pretty well. So this is something that, generally you hope for it to actually follow through once you get a break of a major level. Sometimes it doesn't work out, sometimes it does. On this occasion, we've come below this 1200 mark, and 1200 is absolutely critical because it essentially negates the uptrend that we've seen throughout the whole of 2016 so far. Now, the key here is that we could have broken back up above 1200, but signs were pointing towards a potential break lower, and that seems to have happened. We can see here we've got this descending trend line which highlights the creation of lower highs, but on the downside we had this support structure around about 1181, 1183, and that needed breaking. It has now been broken. We can see there is a little bit of a green coming into play here, so if we did see a rally, we'd be looking at previous support turned into resistance or a retracement of the deterioration from 1195. In either case, I do think we've got further downside to come, and with the bullish outlook that we're seeing for some of the stocks and this sort of risk-on mode that comes with the deal today, there is a good chance that we're going to see further downside for gold.
Okay, Josh, thanks so much indeed. That's a look at what we got in terms of the markets post that OPEC decision out today. We'll watch for a higher close today on the Dow to see whether or not that can follow through to Asia later on tonight.